Welcome, everyone. We're going to give it a few seconds here to allow folks to join our webinar, and then we'll get started. People are just trickling in right now. See the numbers go higher and higher. This is great. All right, well, hello again, everyone. My name is Victor Santiago. I'm the Associate Director for Student and Recent Alumni Engagement here at RIT. Thank you all for joining us for tonight's webinar, Buying Your First Home. I'd like to take this time to go over a few housekeeping items to make sure you have a great experience during the webinar. All attendees will not be seen on the screen. Only the presenters will be visible to everyone. However, if you have any questions for our panelists anytime during the program, please consider entering them in the Q&A box located at the bottom of your screen. Interpreters and live captioning are provided during today's webinar. Thank you to our interpreters and captionists for helping us make today's webinar accessible to all of our RIT Tigers. Today's webinar will be recorded and available, complete with captions, in the next couple of weeks following today's event. If you have any technical questions throughout today's webinar, please feel free to type those into the chat box, and we will do our best to get you the appropriate help. Now on to our webinar. Today we have RIT alumnus Gary Norselli, a graduate from the class of 2009, earning his BS degree in Business Administration Marketing from the Saunders College of Business. Gary is a New York State real estate associate broker and designated realtor with Keller Williams Realty, who began his career in real estate 11 years ago, shortly after graduating from RIT. Coupling his interest in real estate with his passion of helping others has allowed Gary to provide enthusiasm, professionalism, and expertise throughout the real estate process to provide high levels of service in meeting his clients' real estate goals and dreams. Gary now holds the title of CEO and lead agent for the Norselli team, overseeing a team of 4 that closed over 11 million in real estate sales in 2021. This, and for many other reasons, we're happy to have him here with us tonight to help you with all of your goals for buying your first home. Gary, the floor is all yours.
Awesome. Thank you so much, Victor. I really do appreciate the opportunity to be able to share education and knowledge around the home buying experience to everyone that's on the webinar tonight. So I'm going to go through a lot of information, and if there's any questions, please feel free to throw them in the chat. I'll be happy to handle everything at the very end, just because we do have a lot of information to go through. Okay, so I'm going to go ahead and share my screen now. So hopefully everyone can see that. All right. So my name, again, is Gary Norselli. I did graduate from RIT in 2009 from the Saunders College of Business. I studied marketing, got out. I went out into the real world and did not find anything marketing related nor real estate related, but got my real estate license shortly thereafter, and really kind of found my niche and my passion for what I wanted to do for the next 30, 40 years. So I am a New York State licensed real estate associate broker. I also run my team over at Keller Williams Realty, the Norselli team. As Victor mentioned, there's 4 of us on our team here. Myself and my partner, Steve. We have a showing assistant, Mark Federico, as well as our transaction coordinator. I am a member of the Greater Rochester, New York State, and the National Association of Realtors. I also hold a number of different designations. I'm not going to go through each of those individually, but we always like to kind of highlight those. And something else that I really enjoy, in addition to helping educate our home buyers and sellers, I also enjoy helping to educate new real estate agents. So I am also a career mentor and trainer within Keller Williams, and I really enjoy hosting in-person workshops at our office as well. So. All right, so for today's topics, again, a lot of information to kind of go through, but we'll start by talking a little bit about the current real estate market and where things are at. I've divided up the home buying process into 8 steps to try and make it as simple as possible for everyone to kind of understand, what step they need to focus on next in order to buy their first house. So those 8 steps are broken down into deciding to buy, working with the real estate agent, financing and pre-approval, your home search, making an offer, contract to close, closing, and then protecting your investment. Okay. And at the very end as well, we'll talk a little bit more about grants and incentives too, so especially if we have a lot of first-time home buyers on here. I definitely want to kind of highlight some of that information for everyone. And then at the very end, if it is something that you're ready to kind of dive into, we can kind of talk about some of those next steps. All right. So to get started, let's talk a little bit about the current real estate market, because that's something that is often in the news right now. If you're not sure whether we're in a buyer's market versus seller's market, I will break the news that it is a seller's market. And some things that actually means, like what does it mean to be in a seller's market? Over the past 5 years or so, we've really seen a decline of inventory of homes that are available for sale. This has resulted in a lot of multiple offer situations and what a lot of agents refer to as bidding wars. It does make it a little bit tough, for buyers, trying to not just find a home, but then get an offer accepted. We do also hear the term delayed negotiations quite frequently. And what that means is that a home might be listed today, on Thursday, but the seller is not reviewing any offers or negotiating with any of the buyers until a certain date and time. Essentially, for the seller, it allows the most number of buyers to get in there and take a look at the home and have the opportunity to submit an offer. Okay. There are many fewer days on market now, whereas it used to be, a month was normal to see a home sitting on the market before it went under contract. Nowadays, the average days on market is actually 6 days. And it's only a longer period of 6 days simply because of the delayed negotiations. If there were no delayed negotiations, it would probably be only 1 or 2 days on market average. And we've also, as a result of all this, seen home values rising quite substantially. Okay. So here in Rochester, we've actually seen, just even from year over year, home values are up this year compared to this time last year as well. I do have some stats and figures I'll quickly share with you. I was actually going through with my team, going over some of these things. So the number of homes for sale in January of 2021, there was 496 homes for sale. And that's looking at Monroe County in the Rochester area, existing homes, so it doesn't include new construction, but 496 homes this time last year. And this year, we only have 357. That's a decrease of about 28%. Okay. Now, it's pretty common that across the country, we're seeing the same conditions of it being a seller's market. Being licensed in New York State, I can only technically refer to New York State practices and everything. However, we do a lot of networking with other agents across the country. And so we do get quite a bit of insight. And it's certainly something that each market's slightly different, but we're all kind of going through the same motions of what's happening with the seller's market. Our average sales price here in Monroe County, this time last year was about $199,000. This year, we're already up to $228,000 as the average price. So that's an increase of over 14%. It's quite substantial. And we also like to track what's called the month's supply. And that's basically how long it would take for all the homes that are currently on the market to sell if there was no additional homes that came onto the market. The month's supply of inventory last year was 0.8. So already less than a month of homes available for buyers. This year, that's already down about 38%, where there's only like half a month of month's supply available for buyers. Okay. I know this is a lot of information, just statistics, but a lot of times it's easy for agents anywhere to just say, oh yeah, it's a seller's market, but we like to try and refer to actual data that we have available to us. And I know, I had a couple of inquiries around new construction prior to the webinar here, and so I did want to kind of point out, price per square foot as far as existing homes goes in our area. The price per square foot, it was around $110 last year, and it's already up to $126 this year. For new construction, just to kind of give you some perspective of how that increase has happened over the past year and what that initial difference was anyways. Last year, it was around $165 a square foot in January. This past January, we're at $201 a square foot to build new construction. So just to kind of give you some perspective as far as how those home values and everything's kind of increased as a result of the seller's market. All right, so now I want to kind of dive into the home buying process itself. Again, it's a lot of information, but that first step truly is deciding to buy. Not everyone's at a point where they know they want to buy a house right now, and that's okay. At the end of the day, it's your decision. There shouldn't be anyone making the decision for you. Okay, but there are a number of wealth building opportunities, including building equity in your home as you do home improvements, seeing the value appreciate over time. A lot of homeowners have seen that just over the past couple of years. Their value of their home has appreciated substantially. And then there's also numerous tax benefits as well. I always advise everyone talk to their CPA, their accountant, when it comes to tax deductions and filing their taxes. But there are a number of different tax benefits when you do own a home. Okay. Understanding whether you want to purchase an existing home or build new construction. I'll touch upon new construction really quick right now. So new construction, it is something where the options, there's not as many options out there simply because land itself is also limited. And just as much as it's a seller's market with existing homes, we're also seeing new construction activity spike as well. So we are seeing the builders that do have lots available to build on are struggling to find more land. All those lots typically are getting reserved very quickly. And you do have to be mindful of the cost as well. Like I said, the cost per square foot for new construction homes is substantially higher, but you'll also have some additional costs typically afterwards, whether it's upgrades as you're building or trying to then improve the property afterwards, do landscaping, add a patio or a deck, finishing a basement, things like that. And when it comes to new construction, you can either build like in a subdivision where the builder already owns those lots and are selling the lots as well, or build on your own land that you might own already, in which case you can then select the builder. Okay. There's also, multifamily investment properties. We deal with quite a number of investors that look to whether it's just purchase an investment property and flip it or rent it out. But a lot of first-time home buyers, are trying to be economical and understand that, this might not be their forever home and take advantage of maybe finding a multifamily home that they can live in one unit and rent out the other unit and have that kind of cover a good chunk of their mortgage payment. So, that's another option certainly to consider. And, we'll kind of go over a rent versus own analysis on the next slide, just to kind of show you some of those pros and cons, when it comes to renting versus owning. And again, just understanding that it is your decision. A lot of people, might have, parents or friends that have purchased a home. And, at the end of the day, you really do need to make sure that you're making the right decision for you financially, emotionally. It's something where, if you say, what, I know I'm not going to be, here for the next, 5 years. I'm only planning on being here another year, then I'm moving. You really got to weigh the cost of purchasing a home and then selling a home compared to what the value might increase to. So there's a lot of different things to consider when you are looking at that decision to buy. So owning versus renting. So some of the pros and cons here. So when you own a home, you're more likely to have great tax write-offs, like I had mentioned before. You have more control of your housing expenses. You can decorate, make physical changes, and enjoy your home as you see fit. You can build equity as your home appreciates in value. You can move anytime you choose. You're not locked into a lease. And your house will become a home, someplace that you can really retreat to and know that it's yours at the end of the day. Renting, obviously, no tax write-offs. Rent could go up at any time. We've seen pretty commonly right now rents increasing along with the home values. Asking permission to make any changes to the dwelling. That's often something that, the landlord owns the building. So you, in order to make any substantial changes, need to request that permission of the landlord. You don't build any equity. You do kind of give all the money to the owner or the landlord, and it kind of goes in their pocket. Sometimes you can get out of a lease. Other times, you kind of feel trapped, not being able to break the lease early, or feeling like you have to get tied into another 12-month lease. And then it's more of a temporary living situation. We do see that individuals that are first-time home buyers currently renting and have some flexibility in this market are in a good position, because if they need to kind of go month to month, while they're searching for a home, they have that flexibility to kind of line things up for themselves. All right, so working with a real estate agent. So this is something that's really important, regardless of where you are. Again, I'm located in the Rochester, New York area. But regardless of what part of the country you're in, buyer's agents, it's so important to have a buyer's agent representing you and your best interest. Some of the key things that we do for our clients as buyer's agents, we help educate you about the real estate market. We truly analyze your needs and wants. So typically we'll sit down, talk about what it is you're looking for, what are the top priorities, what are maybe lower priorities, and help guide you to those homes that are going to match your criteria. Especially in this market, it can be very difficult, one, just to find a home, but then get under contract on that house. So we really try to, help guide you to those homes that you want to check out. Coordinating the work of other needed professionals. There are a number of individuals involved with the home buying process, not just your agent, but you have a lender, you have an attorney, typically there's insurance agents, title companies. So there's a number of different professionals involved, and part of our job is kind of help coordinate that and facilitate, making sure everyone's hitting their appropriate deadlines and providing what is needed from them. We negotiate on our client's behalf, check and double check paperwork for deadlines and compliance. You'd actually be surprised, how much incomplete paperwork we get on our own listings. It's something that we take a lot of pride in, is really knowing the contracts and forms. And solving problems as they arise. Every buyer is different, every seller is different, every house is different. So it's not uncommon that things might come up, and, being in the business and working with a number of different, buyers and sellers, we come across a number of different situations. So we've gotten accustomed to how to handle some of those issues that might come up, throughout the transaction there. Again, having a buyer's agent kind of ensures that your best interests are being protected in the real estate transaction. And, one of the benefits for buyers is that there's typically no cost for you to have to pay out of pocket for a buyer's agent. I say typically because, every market might be a little bit different. I would say 99% of the time, the seller compensates us what we get paid. They typically have their commission and it's split with both agents. So there's typically no cost to have a buyer's agent representing you in your best interest. And also too, a lot of, especially first-time home buyers don't have a real estate attorney or a lender that they know to go to. So we certainly have built our network of trusted professionals that, we can refer to people. So your agent should really be guiding you to those right individuals that are going to help educate you around those different components of the process, whether it's the mortgage side, the legal side. And at the end of the day, know that you've been, your best interests have been taken into account. Realtor Network. So a lot of people refer to just real estate agents as realtors. And I think it's important to kind of note here that just because someone has a real estate license does not mean that they are a designated realtor. So the realtor term, you actually have to be a part of the National Association of Realtors to carry that designation. We do have a very specific code of ethics that we abide by to ensure that our clients aren't being discriminated against, that, fair housing, laws are respected. So, we have one of the largest networks of its kind in real estate. And, I would say 95% of the agents that you'll come across, likely have that realtor designation as well, because it is so well respected. But certainly, when we don't have clients here, in the Rochester or the Monroe County area, we've networked with a lot of agents across the country that also specialize in certain things. So we have, through our Realtor Network, connections to, individuals that might work specifically with military relocation or foreclosures. So we're always happy to kind of make those connections so you're connecting with the right individual. All right, so now the fun part. This is where, you after meeting your realtor, you're really going to dive into starting your home buying process. And it starts with getting pre-approved for a mortgage. There's a couple different, first and foremost, I always advise that you talk to a mortgage professional, when it comes to the finances. Okay. As realtors, we're not licensed mortgage, originators. We don't work for a bank, so it's something where we have trusted lenders that we always refer our clients to really dive into those numbers, because everyone's personal situation and financial situation is a little different. Okay. But there's a couple of different ways that buyers can fund the purchase of their home. First and foremost, there's cash. If a home buyer has cash sitting in an account somewhere, they could certainly use that to buy the home, and you don't have to worry about getting a mortgage. More recently, we've seen a very unique option, at least here in the Rochester area. Only one or two banks offer it, and it's called a cash guarantee. So it presents like a cash offer to a seller. However, you're planning on getting a mortgage on the back end. It provides a little bit more security for a seller, knowing that it's treated as a cash deal and it won't fall through because of financing. But that's certainly something that's come up a little bit more commonly in our area over the past year or two. After that, typically a home buyer is going to be getting some sort of mortgage financing. So more commonly, you'll see conventional financing, which I would say is the majority of mortgage loans that we see, followed then by government-backed mortgages. So this is going to be FHA, VA, USDA, anything that might be government-backed. And we'll talk a little bit more about those types of mortgages as well shortly. Pre-qualification versus pre-approval. So you will hear both of these terms tossed around by individuals in the real estate profession. So the difference between the two, a pre-qualification is a very initial look at your finances. You might not have your credit checked. They might not be asking documentation of you on income or tax returns. Pre-approval is the full process where you're providing all those that documentation. They're running your credits, and really at that point, once you've been pre-approved, all you need is just to find a house, and then they can submit the application for you. So typically, most home buyers get pre-approved because it shows that you have a solid qualification to purchase a home and get financing. You should be pre-approved before you actually start looking at homes. This is something where I've actually seen some buyers, start looking on, third-party websites, and it's easy to come across homes that appeal to you, but without knowing the numbers, without getting pre-approved, it's hard to understand whether that home fits within your budget. Especially right now with home values rising so much, there's a lot that comes into play when determining the monthly payment and closing costs for buyers. So definitely you want to make sure that first step before you start looking at homes is to get pre-approved. And when it comes to that pre-approval, one of the key things that home buyers would like to ask of their lender is what's included in that monthly mortgage payment. So typically there's 4 components. Okay. It's going to be split up between the principal and interest on the mortgage loan. And then you're also going to see a portion of that goes towards taxes and insurance. And a lot of people will start to hear the term, once they go to buy a house, the term escrow. And if you don't know what an escrow account is, it's basically kind of like a legal holding account for monies, whether it's by an attorney, by a bank. So your bank, when you have a mortgage, typically sets up an escrow account, and that every month you're contributing towards your taxes and insurance. That way, when the tax bill is due each year, the bank will automatically pay it from your escrow account. So you're not writing a separate check to the town or school district separately from your mortgage. Okay. And that, again, there's a lot of different factors that you can kind of talk to your loan officer about to see what's best for you. I would say the majority of people that we help typically tie their tax and insurance into that mortgage payment. Okay. So for your pre-approval, a lot of people always ask me, what should I have prepared for getting pre-approved? And these are some of the items that, if you have available, you want to start gathering. Recent pay stubs, if you have the past 2, or month or 2 worth of pay stubs, that should be good. Past 2 years tax returns, past 2 years W-2s. If you're self-employed, you'd want to have your 1099s available. If you are in a commission-based role with your company, you want to have any commission statements available as well. Same thing for bonuses and overtime. If you want to incorporate that into getting pre-approved, you'll want to have proof and documentation of those. And also just have a good understanding of what your loan and debt monthly obligations are. Okay, whatever the remaining balances are, the lenders are going to want to know all that financial information and then some to make sure that they're pre-approving you and don't miss something. The last thing that you want is to get a pre-approval, start looking at homes, get under contract, and then find out that something was missed that then impacts you not being able to be pre-approved to purchase the home. Okay. So, but the lender will let you know based on your specific situation, what you should prepare and provide to them. So types of mortgages. So again, this is a very broad overview of mortgages. There's many more types of mortgages. These are simply the most common ones that we typically see. Conventional being the most common. Nowadays you can actually get a conventional mortgage with as little as 3% down payment towards the mortgage. So if you had a house that was listed for sale at $200,000 and did a 3% down payment, that's $6,000, towards that mortgage. So you're only financing $194,000. Conventional mortgages are typically, you can take out when you're an owner occupant for second homes, investment properties. And there's what's called seller concessions in which you can ask the seller to pay a portion of your closing cost. This can vary when it comes to conventional financing simply because it's based on how much money you're putting down towards the mortgage. So, on the low end, you can ask for 3%. On the high end, you can ask upwards of 9%. Some other highlights, has very liberal debt to income ratios, the lower monthly mortgage insurance premiums, and you do not need mortgage insurance with 20% down payments. FHA is the next common one that we'll see. This is a government-backed mortgage. The down payment percentage is 3.5%. Specifically, it has to be used for primary residence, the property. You can ask up to 6% seller concessions, with FHA. And, when it comes to FHA, some of those highlights include, unlimited gift funds, are allowed if you're getting, gift money from, whether it's a relative, friend, whoever, towards your purchase. It also has what's called lender credits that can help reduce some of your closing costs. A portion of your upfront mortgage insurance premium can be included in the loan amount to help, again, lessen the initial, burden of how much cash you need out of pocket. VA and USDA are both 0% down payments minimum loans. VA is available specifically for eligible veterans, and USDA is eligible for certain rural areas. So, there is a USDA eligibility map. If you're kind of looking a little further into the country or outside of a city's immediate suburbs, you might find that you're eligible for USDA financing. The seller concessions vary for VA loans, and for USDA, there is a maximum there as well of 6%. Okay. Again, just some general highlights. There's no monthly mortgage insurance requirement for VA. You must meet the VA eligibility, so you have to have the eligibility letter. And the mortgage does have an assumable clause, meaning if you were to ever go to sell the home, someone could assume that mortgage and kind of keep that same interest rate and everything. For USDA, some of those highlights, there are specific income limits that apply, and that does vary by county. And there are some additional monthly fees that apply, and they are a little stricter when it comes to USDA. So like manufactured housing is not eligible for that particular type of loan. One other one that I don't have on here in reference to new construction, because a lot of people want to know how to finance a new construction home. So typically you can see it might be a traditional mortgage where you start construction of the home and you don't take out the mortgage until you close at the very end of the process, in which case it's considered an end loan. And that might be a traditional conventional FHA mortgage, just like you would on an existing property. The alternative is what's called a construction draw loan. So with a construction draw loan, what happens is throughout the building process, the bank is providing chunks of funding available at different stages of construction. So when that happens, oftentimes you'll start paying the interest of what's been owed or provided to the builder there. And then at the very end of the construction, once it's complete, they'll then tie everything into one lump mortgage there for you. Okay. So there are those different, options, and sometimes it depends on the specific scenario. If you're building on your own lot versus building in a established subdivision where the builder already owns the land and the available lots there. Okay. All right. So next to the different types of mortgages, a lot of people wonder, okay, what are my closing costs? Like, how much money do I need saved up to actually buy a house? What are my upfront costs? And this is something that I always try to go through as early on as possible with my clients, just so they can best prepare themselves for what to expect. Because a lot of times you hear these commercials for 0% down payment mortgages, and you think, okay, I don't need anything saved up. But there is quite a bit that goes into the total closing cost, and there are things that you do need to pay up front. So when it comes to the closing cost specifically, so you find a home, you get under contract. Typically, it's about a 45 to 60 day time frame to close on the home. So at closing is when you then pay the down payment. And the down payment is going to be a percentage of whatever the purchase price is. So again, for example, on that $200,000 home, if you're doing a 3% down payment, that's going to be $6,000 total towards a down payment. Escrows. So as I mentioned, when it comes to, your monthly mortgage payment, a lot of times, buyers escrow their taxes and insurance. So that way each month you're contributing into this escrow account. And when the tax bill is due, the bank pays it from that account. So typically, to initially fund, the escrow account, the bank needs about a year's worth of taxes and insurance. And the reason it's about a year's worth of taxes and insurance is because you need to provide initial funding. So that way there's enough when the first tax bill is due. But you as the buyer do also have to reimburse the seller for what they've already paid for the year, which now you're going to own the home. Okay, so usually the escrows portion of the closing cost comes to around a year's worth of taxes and insurance. Okay, so that's the second component. The third component is going to be all the bank fees and costs. And this is where it varies a little bit from one bank to the next, and why it's important to kind of shop around if you have the opportunity to do so. And it's hard to kind of pinpoint an exact amount because, again, it does vary one by location, by bank. But the fourth component of those closing costs, at least here in New York, is an attorney fee. It's customary in the state of New York that you have a real estate attorney representing you as your buyer's attorney, and the seller also has their own attorney representing them. Okay, and attorney fees in our area in New York, in the Rochester region, typically runs between $500 to $600. As you get downstate a little closer to New York City, you might see it's a little different. But here in our area, usually you just get charged a one-time transaction fee of that, $500 to $600. Okay. So when you add up those four things, you get your total closing costs. Now, when you go and get pre-approved, you can ask the lender for an estimate of those closing costs. That's going to help give you an idea of, based on an example, purchase price with taxes, how much you need to have saved up. And that's where, you might find, okay, maybe I need to save up a little bit more before buying a house. If that's the case, you can kind of set up a plan for how much you want to save and by when, and, work with your loan officer to make sure that you stay on track to hit that goal. As far as upfront costs go, because the closing costs you typically pay at closing, but there are things that you will pay beforehand. So the first thing that you'll pay beforehand, as soon as you have an accepted offer, is going to be a deposit. And we refer to that deposit as an earnest money deposit. That's typically, on a national average, 2 to 3% of the purchase price of the home. Now, this is something that it can be more, it can be less. At the end of the day, it's a contract term where you can kind of put an offer out there of what you want that deposit to be for the seller. A lot of times right now, I'm seeing buyers put down larger deposits just to show greater seriousness, with their offer. If they have more skin in the game, a seller might appreciate that and say, okay, you know what? I feel there's less risk of this buyer just canceling the contract because they run the risk of losing this large deposit. But at the end of the day, it's up to the buyer to determine, how much of a deposit they want to put down. Now, be mindful when it comes to this deposit, it does go towards all those closing costs, right? So if you were to put down a $10,000 deposit and your closing costs were, let's say, $30,000, at closing, they're going to say, okay, your total closing costs are $30,000 minus the deposit that you provided already. So you only need to bring $20,000 to the actual closing, okay? Home inspection. So this is something where we've seen less of nowadays, just because the market's been so competitive. But when you do have the opportunity to do a home inspection, they typically range between $300 to $500, and that's for a basic home inspection in the Rochester area. There are many other types of inspections that you can add on to the basic home inspection. But a lot of times, we see individuals do that regular home inspection that kind of goes from roof to foundation. Overall, the inspector will visually look at the home and provide you a written report stating any findings. Okay. After the home inspection, you're going to have to pay out of pocket the bank appraisal. So once you are under contract on the home, you're going to apply for the mortgage now with the bank, and they are going to charge you an appraisal fee. That appraisal fee is basically the bank hiring a third-party company to come in and determine the value of the property for the bank. The bank does not want to give you a loan for more than the home is worth. So they're basically looking to make sure that the value of the home is what you're paying for it. And the bank appraiser is also looking to make sure that the home meets certain criteria as far as condition goes. And this is something where, when it comes to the type of financing, it might vary. So conventional financing has looser, appraisal guideline terms. It doesn't have to be. It can have chipping paint. It can be missing a handrail. Whereas government-backed mortgages are stricter when it comes to those guidelines. And we've seen deals fall through because of that. But it is something that, as agents, we're very in tune with, some of those things as we're doing showings, what to look for. So we know up front, hopefully, if we'll have any issues when it comes to the bank appraisal and financing. Okay. But that bank appraisal typically costs between $400 to $600. And you'll typically see the bank will want to charge that at the time that they order the appraisal. Again, simply because it's a third-party company that they have to obtain it from. The last thing that you'll pay up front is going to be your homeowner's insurance policy. And this is going to vary drastically, again, based on the property, a number of other factors, if you're bundling policies. But on average, we typically see between $500 to $1,000 there. Okay. So as far as, those closing costs go, the upfront cost, this is kind of, where we can kind of give the best estimate of, what to expect and budget for. When it comes to, because I know there was a question around, okay, at what point do I need the money for closing? Because a lot of people do, if they're putting down a large down payment, you might have it in investment accounts in different locations, and you're going to have to, manage and transfer funds. Again, the biggest thing that you're going to pay up front as soon as your offer is accepted is going to be that deposit. And it might be, a couple of $1,000, it could be $10,000. At the end of the day, it's whatever you decide, but you will need that usually within 2 days of your accepted offer. So that cash you would need to have readily available to be able to provide to go into the escrow account. The rest of it, you have time until closing. So if it's a 45-day closing, and you've got those 45 days to make sure you can manage getting all the funds transferred into the account you'll need to then write the check for closing. Okay. All right. So some additional tips and suggestions. Again, I am not a lender, a licensed mortgage officer. However, I always advise my clients to do their due diligence when they're talking to people. So first and foremost, determine what you're comfortable with on a monthly budget for your monthly payment. You might pre-approve for some crazy amount. That does not mean you actually want to spend that much. You need to determine, what you're comfortable on a monthly basis, paying towards the mortgage, and let your loan officer know that. Because based on that number, they can then better determine what price point you actually want to look at homes up to. Okay. As I mentioned, it's not a bad idea to shop around different lenders, before you actually find a home. So, the reason you want to do it before you find a home is because once you are under contract, you have to immediately apply for the mortgage. And there's a lot of dates and deadlines that you have to satisfy within the purchase contract. And it's a little too late at that point to spend time or, the right amount of time to shop around. Be mindful that if you are shopping around, it might impact your credit score a little bit in a negative fashion. So just, if you are going to shop around, don't go overboard. And then finally, I do encourage people to ask for what's called a fee worksheet from the lender. This fee worksheet will outline all of the costs that would pertain to closing. Okay, so it'll break down the down payments, the escrows, all the bank's costs and fees. And so if you are shopping around from one lender to the next, you can then side by side compare those fee worksheets and see what's different between one lender to the next. All right. Some home buyer don'ts, just because there are things that we've come across over the years and that lenders typically will advise buyers be mindful of. Don't apply for new credit cards or lines of credit that can negatively impact your credit and your pre-approval. Don't make any large purchases like new cars, new furnishings for your home. A lot of people get excited once they're under contract and want to go out and buy a new, living room set. However, that is something that, I always tell people, run it by your loan officer first. They should be looking out for your best interest as well. And they'll make sure that you don't jeopardize, not being able to pre-approve because, all of a sudden your debt to income, ratio might be exceeded. Don't max out your existing credit limits. Don't quit or change jobs. Definitely if you do plan on making any changes, let your loan officer know. A lot of times it's okay, but they might need to see a certain number of pay stubs prior to allowing you to close. And then don't make any large deposits or withdrawals from bank accounts that can't be traced back to where they came from. A lot of times, people might have, relatives that say, oh, we have a gift money for a wedding or whatever the case may be. And when you transfer that into your bank account, your lender is then going to want to see a letter outlining what that specific, deposit was for or withdrawals. So just some things to kind of keep in mind. Never hesitate to ask your loan officer if you should or shouldn't do something and how it might impact your pre-approval status. All right, so hopefully I answered everyone's questions. Again, at the very end of the webinar, I'll kind of go through all the questions that have been submitted, make sure I didn't miss anything. But your home search. So now you've been pre-approved. Now it's time to actually start looking at homes. So how do you actually find a home? There's a couple of different ways in which buyers might come across a house for sale. The most common is through an agent. And as agents, we have access to what's referred to as the MLS. The MLS is the multiple listing service, and that's the database that all of us agents are putting the properties for sale into. So as soon as our clients, as soon as a property is entered into the MLS that matches their search criteria, they get a notification from us right away. And that allows us to then get them in to see the property quickly and allow them the opportunity to be able to make an offer. Off-market properties. So as agents, we often are, working with, sellers or, clients that might be preparing their home for sale. In some cases, we've dealt with, off-market properties where they haven't been advertised to the general public yet. So, we do come across those off-market properties. We've also gotten creative, over this past seller's market and, reached out to homeowners that might have homes that match our buyers' needs. In which case, no one else is really even aware that these people are going to be moving. Third-party websites, these might be websites like Zillow, Realtor.com. These should all be syndicating from the MLS. So, when a client gets set up on an MLS search through the agent, they're getting those notifications immediately. Whereas there might be a syndication time frame from the time it goes into the MLS until it gets to some of those third-party websites. So it is important that if you are working with an agent, you be set up on that MLS search so you get everything right away. And then there's also for sale by owners, where a homeowner might be listing their property on their own. A lot of times those would specifically show up on third-party websites. As agents, we can still work with them, but they are something that's not specifically in the MLS. So every once in a while we'll come across those. Those you might actually be able to get a little bit of a deal on. We find we see that the statistics show that for sale by owners typically end up selling their home for less than what they could have if they had listed it in the MLS. So other considerations, as you're looking at homes, short-term versus long-term homes. How long do you plan on being and living in the property? Is it maybe a short-term, 3 to 5 years? Are you looking for a forever home where, you want to, move, make it your own and be there for, 30 plus years? Other considerations, resale value, especially in this market where a lot of home buyers are considering, okay, this is my first home and I know that I'm going to look to move in 3 to 5 years. What's the resale going to look like? Resale on a typical 3-bedroom, 2.5 bath is going to probably be a little bit better than a single bedroom and single bathroom home. So we try to take into account those different considerations as well. And then really how the home functions for you. When you're looking at homes, you need to, really think about how you're going to use the space, and does it function how you need it to. So I kind of break down, home search criteria into 4 different aspects, from features and amenities to neighborhood and lifestyle. So these are all things that you as a home buyer should be thinking about, when you start your home search. Features of the home are going to include, the size, number of bedrooms, bathrooms, garage. Does it have a basement? The house style. Do you maybe prefer a ranch home or a 2-story? The lot size, is a yard space important for you? The age of the home. Some people prefer something that's a little newer built. Some are okay with something that's a little older. Might you be looking for something that has an in-law suite? Maybe you have extended family that comes often. Amenities, these are things like fireplaces, pools, the outdoor space like a deck or patio, fences, air conditioning units, closet space, and flooring types. Whenever we set our clients up on an MLS search, we try to keep the criteria pretty broad, simply so you don't miss out on any potential matches when it comes to that home search. So we often try to keep the criteria specific to the features, but then as we're looking at homes for our clients, we'll start then looking at the amenities and seeing if it's a good match for them. Neighborhood. So where do you actually want to live? Do you have preferred areas and streets? Is school district of importance? Distance to work, shops and parks and recreation? Where do you frequent? Do you want to be within a 20-minute drive, to all your, local conveniences? Do you want to be a little bit more rural? And are you okay with, maybe an hour commute? So those are all things that are very personal, that again, you want to take into consideration when you're looking at homes. And then lifestyle. So certainly, what are your actual motivations for purchasing a home? Do you have children or pets? Do you like to entertain? If you're looking for something that's a little bit more open of a layout compared to very sectioned off. Again, expected time in home, if it's a short-term home or a longer-term home. And are you looking for something that has more casual spaces or more formal, spaces? A lot of people nowadays, when they're building homes, are foregoing the formal dining room because they have typically a dinette or a morning room space. And that's typically where, family gravitates to eat. And, they don't necessarily need that formal dining space. It's more of a flex space nowadays. So all those things are, it's going to be very unique to each individual home buyer. So it's important to kind of start thinking about those things now if you are planning on buying a home in the near future. Something we always encourage our clients to do, really start making that list of like, what are the must-have features and what are the like want-to-have features? Because if you can kind of make that list, it helps us as agents really look for and find, the ones that are going to be the best fit for you as a home buyer. Okay, sorry, I thought I skipped a slide there. So, one other thing, when it comes to, looking at homes and the home search, certainly, as you're looking at homes, you want to be mindful of the condition. Your agent should really be pointing out any concerns or defects that they might see in the house. Certainly, we are not licensed home inspectors. However, we see a lot of homes and there's things that, we would certainly advise our clients on. If we see a lot of water stains, in the ceilings and the walls, we can often tell you how old, the furnace, and the hot water tank are, the roof, if it's replacement windows. So we try to make sure that we're outlining all that information for you so that you can make an educated decision in determining whether you want to make an offer on that home or not. And that kind of then ties into, when it is time to make an offer on a home, there's a couple of things that we try to do before you do so. First and foremost, if there's any outstanding questions you have, we try to make sure that we get additional information from the seller and the listing agent. That way, there's no outstanding, information that's needed, and you can make the best decision for you. We also, before we write up an offer for our clients, we reach out to the listing agent and ask them, is there any preferred terms that the seller has? Are they maybe trying to move in conjunction with selling their home and need to possess the house beyond closing for a certain period of time? Are they looking for a specific closing dates? Is there a certain condition or term that's more important to them than others? You might sometimes find that, price is certainly important to a seller, but there's other things that can kind of factor into making an offer more favorable to the seller. We prepare what's called a comparable market analysis, or CMA, and that's basically a look at the past activity of comparable homes that have sold over the past 6, maybe 12 months. Now, this has gotten a little tougher over the past couple of years because our current real estate market is outpacing the activity that's happened over the past 6 to 12 months. So while I'm running comps for my clients, they're not necessarily always the best indication of what the home is then going to sell for. More so, I try to look and see what the current activity is for current homes that are listed for sale, as well as what's currently sale pending. Sometimes I can reach out to agents that have a home that's under contract and say, hey, can you give me any kind of indication whether this sold like well over asking, around the asking price, and what the activity levels were like, to kind of help guide our clients in understanding, how they should make their offer. There's also a number of required federal and states property disclosures. The two most important ones are what's called a property condition disclosure and a lead compliance addendum. And the property condition disclosure is most commonly provided on residential properties where the owner has lived there or not lived there. There are certain exemptions, but that property condition disclosure outlines whether there's been any defects or if they're aware of any defects to the home. The lead compliance addendum is required for any home built prior to 1978. Any home built prior to 1978, it was a little bit more common that lead-based paints were used and lead-based products. And so, the seller will typically indicate whether they know of any lead-based products specifically. Most times, at least in our area, I do not see that many sellers have done lead-based paint testing, but it's important for buyers to understand and know how to take care of a home that is built prior to 1978. And fair housing and cover letters. So fair housing is a huge part of our industry, and no home buyer should ever experience any sort of discrimination. There's a number of protected classes on a state and federal level. And, we as agents, again, as realtors, we abide by a certain code of ethics. So that way our clients really are protected. Years ago, it was a little bit more common that buyers would provide a cover letter, or they would refer to it as a love letter to the seller, outlining how much they love the home and why they would love to buy it from them. And 95% of the time, those letters were violating some form of protected class, whether it was family status, marital status. There's so many different classes that were being violated. We actually had guidance from our state association of realtors to stop using cover letters about 5 years ago. So it is something that a lot of buyers will ask me, can I include a letter with my offer? And, unfortunately, we do have to advise that it's not in their best interest, because just as much as you think you might be highlighting something that's of value or of importance to the seller, they might actually think otherwise, and you can be discriminated against. So definitely something, fair housing is really important, and that we take we put a lot of emphasis on in our career. So when it comes to making an offer, there's a number of terms and contingencies that are going to be included in that offer. Okay. First and foremost is going to be price. Okay. So the price is something that it's going to be important to the seller. There is what's called escalation clauses. Escalation clauses basically state that you're offering a certain dollar value for the home. However, if there's a competing offer that comes into play, you will automatically increase your offer X number of dollars over that highest offer. Okay. So for example, you might say, I'm going to offer $200,000 for this home, but if a higher offer comes in than mine, I'm willing to pay $5,000 over that higher offer up to a max amount, let's say up to $250,000. You have to have some sort of cap on, what that max escalation would be for your own protection. But that's definitely something that we've seen a lot more of in the seller's market when there are multiple offers on the table. So there's price, seller concessions. I mentioned this briefly before when talking about the mortgages. Seller concessions are when you as the buyer ask the seller to pay a portion of your closing cost. Earnest money deposit, again, that's something that is, there's no set dollar value. You as the buyer make that determination of what you want the deposit to be. Conveyances, so this is all your personal property that's included with the sale. Kitchen appliances, washer, dryer, things that aren't actually attached to the home. Items excluded, sometimes the seller will indicate if there's any items that they won't be leaving there at the property. Contingencies. So again, a seller is going to look at all the terms and contingencies in a contract. Here in New York, in our area, we have the attorney approval contingency. It's usually a 3-day period. Financing. So if you're getting a mortgage, you have to indicate a financing contingency. Inspections. If you're doing inspections, that's also a contingency to the contract. And any grants or incentives that you might be getting are also going to be contingencies in that purchase contract. Closing date is negotiable. Again, that's something that you can try to be as favorable as possible, for a seller, as well as the possession date. So you might close on a certain date, but you might say the seller can remain in the property and basically rent it back from you for a period of time. Permits and certificates of compliance. So whenever there's a structure on the property, whether it's a fence, shed, deck, pool, technically there should be a permit or a certificate of compliance on file with the town for that structure. So that's certainly another term and contingency that you can include in the contract. And some additional things that we've started looking at including and incorporating into contracts to make our offers more competitive for our buyers. Home warranties. So you can certainly ask the seller to provide a home warranty. However, I've also seen home buyers offer to pay for the home warranty because it starts effective the date of the accepted offer. So the seller is actually covered under that warranty until it closes. So that's one additional way of being competitive as a buyer in this market. Seller incentives. So I've had buyers offer, to provide a $500 gift card to the seller for moving expenses. So getting creative in, kind of finding ways to appeal to the seller. Agent commission, while it is typical that the seller will compensate both agents, I have actually seen some buyers will offer to cover their agent's commission to save the seller money out of pocket at closing. And there's also what's called appraisal gap coverage. Again, this is something a little bit more specific to the financing if you're getting a mortgage. But it basically, if the appraisal comes back lower than the purchase price, you need to determine, okay, if you can afford to make that difference or a portion of that difference up on top of your closing costs. So it's a little bit more of a specific term and contingency, but it's something that we saw come into play about a year ago when home values increased very drastically compared to the year before. Making an offer. So when you submit your offer, there's 3 possible responses. They're either going to accept your offer, they're going to reject it, or they might counteroffer it, meaning they want to work with your offer. However, there's certain terms or contingencies they want to change. We talked briefly about delayed negotiations, basically meaning, a home might be listed today, but offers are not being reviewed until a later date and time. Multiple offer situations, you do need to be mindful of submitting your best offer that you can, because oftentimes you're not getting a second chance to make any changes to your terms and contingencies. And I recommend including your loan officer in offers as well. I certainly, as an agent, always call and just present my client's offer to the listing agent, but you can also ask your loan officer to call the listing agent and advocate for your buyers as well. Not a lot of agents do that, and I find a lot of great reception from those agents that do receive those calls from the loan officers. and knowing when to walk away. So at a certain point, you have to know, what is too much for you to take on, in buying that particular home. You might say, okay, my max is 250, and the seller comes back and says, hey, you know what? If you can do 260 or 270, it's a deal. At the end of the day, it's your decision. You have to understand, it's up to you, and you can certainly say no as well. So contract to close. So I'm going to start flying through the rest of this here, just, for the sake of time. But, once you do have an accepted offer, you'll have what's called a fully executed purchase contract. So you, as the buyer and the seller, have signed that purchase contract. You're providing the earnest money deposit. And another term for the earnest money deposit is good faith deposit. You'll obtain your attorney approval letters, again, specifically for New York State here. Perform any inspections as included in the purchase offer contract. And again, that's something else that might vary a little bit from state to state. You'll apply for your mortgage and obtain what's called a mortgage commitment. So that mortgage commitment states that the bank has reviewed and approved of your mortgage application, conditioned upon some additional documentation needed from you. And then the lender will complete that satisfactory appraisal, as we discussed. And then you'll also then need to go ahead and secure your homeowner's insurance policy for that first year. While all that's happening, the attorneys, here in New York are preparing what's called the title package. That's all the legal documentation that's going to transfer ownership of the home from the seller to you to be the new homeowner. Closing. So once all that's been completed, then, just be mindful, at least here in New York State, the closing date that's in the contract is not a final date. It's not the final closing date until you receive what's called the clear to close from the lender, and that the full and complete title package has been provided from the attorneys. At that point, then the attorneys will go ahead and schedule the closing. So it's not uncommon that we see the closing dates actually later than the date in the contract. And right now we are seeing a lot of delays as a result of the title package and the survey that needs to be provided for the buyer. So there's only a limited number of property surveyors that are out there, and everyone's backed up. Weather is certainly a big component to their job as well up here in our area. So we have seen delays, not by a month or two, but usually by at least a few days when it comes to closing as a result of that survey being delayed. Right before closing, you'll do a final walkthrough of the home to make sure it's in the condition it's expected to be in. And then you will always advise our clients to make sure that they transfer the utilities. So your gas, electric, and water. We'll advise of other things to be mindful of in scheduling as well. So your internet, trash receptacles. And then you'll actually go to closing. Your attorneys will typically tell you exactly how much you need to bring, after your deposit's been taken into account, and you'll go sign the paperwork, and that's when you get the keys, to your new house. All right. So it's a process. At least for my clients, we try to make sure that we're facilitating and helping them understand each step of the way, because it is information overload. This webinar, it's a ton of information to take in. However, each step of that process, we're trying to guide people through. The last, eighth step that we have for our clients when purchasing a home is protecting your investment. So post-closing, making sure that you're performing general home maintenance as needed, watching for signs of leaks, damage, and wear. One of the biggest, things that's an issue for homeowners is just the diversion of water away from the home. Whether you get a leak in the roof, the water sitting next to the foundation, you always want to be mindful of taking care of your home so you don't have to experience any larger cost. But fixing small problems early on can save you a lot of money down the road. I always advise, talking to a CPA when it comes to filing your annual taxes, discussing any write-offs, and also hiring a financial advisor. It's certainly something where if you're buying the home with someone and, God forbid, something happened to one of the parties, you want to kind of know what your options are, as far as like life insurance and everything goes, to be able to, maintain the property and what that might look like. Grants and incentives, we're almost there. So for first-time home buyers especially, there's a lot of different opportunities to save money out of pocket at closing. RIT specifically does partner with what's called the Employer Assisted Housing Initiative through the city of Rochester to offer up to a $9,000 grant towards closing costs. And the city of Rochester, in and of itself, that offers a $3,000 component to that. So there's certain employers in the Rochester area, RIT, U of R, a number of them that offer this incentive, and it's called under the Employer Assisted Housing Initiative. You do have to purchase in the city of Rochester. Usually there's a 5-year term that you need to occupy the home. If you were to sell it before then, you would just repay a portion of the grant. And then the Homebuyer Dream Program. This is actually one of the biggest ones that we see right now that homebuyers take advantage of. It's a $10,000 grant that you can get. Certain banks participate with the state of New York. And if you're eligible, if you meet certain income requirements, you would be eligible to get $10,000 towards your closing costs. Okay. The New York State Association of Realtors also has a $2,000 grant available to home buyers. It's something where not a lot of people are really aware of that. We try to make sure that we're mindful of all different opportunities available for our buyers, but that is another way of saving a little bit of money out of pocket at closing. And then Monroe County itself has numerous different grants to help, whether it's home improvement after closing, rehabbing properties, upwards of like $20,000. So, a lot of times the lenders, will partner with the different grant agencies to basically kind of help facilitate, lowering those closing costs and making sure that you've applied for the appropriate grants when needed. Okay. But it is something where all of these typically have requirements that you do have to meet in order to be eligible for the appropriate grant. Okay. All right. So next steps, if you are interested, in purchasing a home, would be to arrange for financing. So looking at getting pre-approved for a mortgage, and then also meeting with the realtor to then really begin your home search. For us in particular, we deal with a lot of relocations, people coming to and from the Rochester area. So definitely take advantage of, whoever your realtor is, their nationwide and international network of agents that they know. And then one last thing, I think that was it actually. So Victor, do you want to open up the questions?
Yes, there's actually a lot of questions.
Okay, all right.
That have come in, and just trying to be mindful of everyone's time. We're going to try to get through as many as we can here. First one we got: do realtors have biases towards higher commission homes? Is steering people away from low commission homes common?
I would say that's unethical. I would say a good agent should never consider what they're getting paid for commission. There are some homes that in the MLS will be listed for a little bit of a lower commission, and while it's not as common, certainly, if you have an agent that is thinking about themselves, they might kind of steer their clients towards one where they're going to get paid more. However, it really should never be a consideration for an agent, at least one that's abiding by the Realtor Code of Ethics.
Makes sense. Is there a rule of thumb to the amount of money you should have when you're ready to buy a house?
So I outlined the closing cost there, and that's kind of, again, it's hard to pinpoint like an exact figure because everyone's financial situation is going to be a little specific to them. But also be mindful, in addition to the closing costs, you want to make sure that you're not house poor. Once you've paid all those closing costs out of pocket, you do want to be able to have some reserves for yourself. Whether it's for home improvement projects, to have that emergency fund. But when it comes to the closing cost itself, again, it's those 4 components: down payment, about a year's worth of taxes and escrow, the bank's closing costs and fees, and then in New York State, your attorney fee.
Where can we look for income limits on USDA loans, and what encompasses manufactured homes?
Sure. So the USDA, so a lot of times the lenders have all the requirements for USDA loans and mortgages. And USDA actually has a very specific website. It's a website that we use when we're verifying the eligibility for a property. So you can either go to the USDA website to see what their current income limits are. And then as far as manufactured homes go, it depends on how the home is constructed. manufactured homes can be financed. It's a different type of financing. Not a lot of traditional banks and lenders will provide that financing. And there are certain requirements when it comes to that manufactured home that's on a piece of land. A lot of times it might have to be a certain age or newer. So that one's a little bit more specific. And we have a couple lenders that we're aware of that can do financing for that. But it's usually you'll see a manufactured home is kind of pieced together a little bit more.
Good to know. If I'm buying a house in a year and have a large amount of savings, would you suggest dropping money on student loans, dump it into investments, just hold on to it to put more money down, or something else?
Well, again, that's very specific to everyone's personal financial situation. I would probably advise the best thing to do is to talk to a loan officer first. That way you can truly understand, the dynamics of the pre-approval and how much money is needed. And then they can advise, the best way to kind of hold on to that money for that year. Certainly sometimes when it comes to investments, there's a degree of risk involved. You certainly hope to see growth, but you might also experience loss. When it comes to paying down student loans, if you're trying to lower your debt to income ratio, if that's a concern for the lender, then that might be the best option. So at the end of the day, based on, collectively all of your finances, they're going to be more specifically able to tell you where you should kind of, put that money in holding.
Great. Speaking of money, how long before buying a house is recommended to avoid making big purchases? We talked about it a little bit.
Again, I'd run it by a loan officer because a lot's going to depend on the specific debt to income ratios and how much you have out in loans. So it's going to vary from one individual to the next. So unfortunately, I can't give a very specific answer on that. I mean, so you can buy a car, when you're in the home buying process, but again, you just have to make sure that you're not exceeding any of the ratios or requirements that might be part of that pre-approval.
Gotcha. If there's a chance you're moving out of the area in 3 to 7 years, what advice would you offer to buying a house to prevent it from becoming an anchor? For example, should I buy a cheap house when I can afford to move out of the area and make the mortgage, or rent it out, or try to find a nicer house that might sell easier?
Yeah, so and actually there's another question that kind of ties into this as well. It was, how long do I have to wait for a buyer's market? Unfortunately, when it comes to, the timeframes and waiting to, if you're going to be moving out of the area in 3 to 7 years, the seller's market, as agents, we're not anticipating anything changing, within the next 12 to 18 months at least. The inventory of homes for sale has constantly been going down year after year. Again, this year, we're even lower than what we could have ever expected from last year. And it's going to take quite a while for that inventory. Buyer demand is up here. Your seller inventory is down here. It's going to take a while, and inventory is not just going to jump up overnight to meet the buyer demand. It's going to progressively go up over a course of a number of years until that buyer demand becomes more balanced. In which case, in a balanced market, then you kind of have the right number of homes for sale for the right number of buyers. So in 3 to 7 years, I would hope that, if you were to buy a home today, that you wouldn't have too much of an issue selling it, because I do think we're probably going to experience similar market conditions over the next couple of years. A lot depends on just the economy. We thought that the pandemic was going to make a significant impact on the seller's market, and it actually made it a lot worse. So I do not see anything changing over the next 18, maybe 24 months. But it's impossible to have a crystal ball to say, okay, something could happen in 10 months that causes the market completely to shift the other way. But as far as in 3 to 7 years, finding something, you're to find something that you could certainly fix up right now, and you could build equity in that home as you make those improvements, have no problem selling it down the road. Or I do have a lot of people that consider, okay, if they find the right home in the right area that has good rental potential and income potential, you could hold on to that as an investment property. Okay, so there's different options. It just kind of depends on what's most important to you and what you're comfortable with. There's a degree of risk involved with any decision there.
Gotcha. Now, does any of this change when buying a condo?
So there's different requirements as far as like lending goes for condos. Townhomes and condos, in our Rochester area, a lot of people kind of think of them as the same, but there are different requirements based on how they are established with the association. So condos do require a little bit more on the lending side of things, and they might not always be eligible for like FHA or government-backed financing. That's usually one of the biggest differences I would see. Condos, co-ops, which we don't really deal with many co-ops here at all in the Rochester area, are much more common in some of the bigger cities, New York City, Boston, LA. But for the most part, for a buyer, here in our area, as far as condo versus a single family home goes, or a townhome, it really depends on what your goal is, with the home. Condos and townhomes, typically, you're paying a fee monthly to cover certain maintenance of the property, compared to a single family home where when you own that, you're taking care of that maintenance yourself. So there's trade-offs. There's pros and cons to either way. At the end of the day, it's what's important to the buyer.
Okay. Now, if something happens and you have to back out of a sale, do you get your earnest money deposit back, or is it like money gone?
Yep. So that's a great question. So the deposit, it's there to kind of keep both parties committed to the contract. If you were to do a home inspection and let's say some issues came up from the inspection that you couldn't resolve with the seller, either party is entitled to cancel the deposit or cancel the contract, and your deposit would be returned back to the buyer. If there was an issue with the title to the property that the seller couldn't resolve, again, either party can go ahead and cancel the contract and you'd get your deposit back. Now, if you just get cold feet a week before closing and there's no contractual reason for which you can cancel the contract, then yes, you are likely to lose the deposit. I've seen it happen, a couple of times, and they're usually due to circumstances outside of the buyer's control, that they had to cancel like right before closing, and they did lose their deposit. But if let's say you're in the process of applying for your mortgage and something pops up that wasn't observed before, and you no longer pre-approve, or there's an issue and you can't get the financing, because financing is a contingency to the contract. If the bank can no longer provide that financing to you, you again could cancel the contract and get your deposit back. So there's often many reasons why you can cancel the contract and get that deposit back. But if it's not contractual, then you do run the risk of losing it.
That makes sense. A few more questions. Are there grants for assistance with specifically people with disabilities?
So none of the grants that I'm familiar with are, there's a couple of different housing agencies within the city of Rochester that kind of, summarize and, handle a lot of the grants and incentives that are available. And they would probably be the best contact for that. But as far as specifically for disabled individuals, I don't know of anything in particular. More so, there might be grants available for certain home improvements that might be needed. I do believe that there's certain tax deductions, for medically necessary improvements to a home as well. So there are some things that might be available just as far as like grants and incentives go for just like towards closing costs that I have not seen personally.
Do you think buying an abandoned house and then renovating it to a useful house, usable house, would that be much more affordable than the housing market, or what are your thoughts on that?
Yeah, so it's certainly something where, I see investors all the time purchase homes that are abandoned or in foreclosure and need a ton of work, and they, invest heavily into that. And that's why you then see, that home comes onto the market 6 months later, and now they're selling it at a much higher price because they've improved the value of it significantly. So it's certainly something if that was, your goal and you could foresee doing that, whether it's doing the repairs yourself or hiring out contractors to do the repairs or work that's needed, you could certainly make it worth your time in doing so. The only issue when it comes to buying abandoned homes or foreclosed properties, when you're getting financing, is that a lot of times we see that those particular types of sales do need to be cash or like a rehab mortgage, depending on the condition of the property. Often because the appraisal will not pass because it's not in good enough condition. So that's usually the biggest hurdle when it comes to buying a foreclosed or distressed property, is just the financing piece of it. But certainly if you're paying cash, then it's not an issue.
Gotcha. And last question. Are there any grants and incentives for first-time buyers? And do you have any like additional resources that you might suggest for people here who logged in?
Yep, absolutely. So pretty much all of those grants and incentives that I listed in the presentation are all geared towards first-time home buyers. So it's definitely something where there's a lot out there. And you can also approach your individual bank and see if they offer a unique program specifically for first-time home buyers. I know the funding through New York State had changed a few years back. And so the Home Buyer Dream program is really probably one of the biggest ones that first-time home buyers try to take advantage of, because it is a significant amount of money that's available. And usually the funding becomes available sometime in the spring for that. And each bank gets like an allotment that they can use towards their buyers that are purchasing properties. As far as additional resources, definitely if you're going to look on the internet for additional information on the home buying process, the National Association of Realtors is the go-to source for that. It's gonna be the most reliable information that you're gonna be able to find out there. Individuals that are just posting information online, it might vary by state. It might not be, provided by a specific source, but the National Association of Realtors. So if you go to realtor.com or realtor.org, realtor.org is our agent side of it. And that actually offers a lot of great articles and tools and techniques for home buyers and sellers as well. So realtor.com, realtor.org are two really good reputable sources that you can refer to as well.
Perfect. Well, thank you, Gary, for all of this information. It was very valuable. I know I took a lot of notes, and I bet some of our attendees tonight also learned a lot as well. But before we leave today, I want to encourage everyone here on the call, on the webinar, to connect with us on all platforms, from Facebook to Instagram to Twitter, you name it, we're probably on it. Links to our social media pages can be found in the chat box, so go ahead and like us, follow us, whatever the platform says. And in addition to our social media platforms, we do encourage you all to join our newest RIT only platform called Tigers Connect. And what is amazing about that is that it's the opportunity to connect with RIT students, faculty, staff, and alumni around the world, and it's only RIT specific. And to register for the platform, you can click on the link found in the chat box or visit tigersconnect.rit.edu. And our division of University Advancement does host a lot of virtual, hopefully now soon, in-person events all year round that are just as fun as this one and as educational as this one. To learn more about those upcoming events, visit rit.edu/alumni/alumni-events. And then if you'd like to receive emails from RIT regarding any events, make sure to email us. Your email is up to date with our office. And to do so, go to rit.edu/alumni/update-your-information. Man, these links are long. Again, thank you all for joining us today. I hope y'all learned a lot, just like myself. Gary, thank you again. And thank you to our interpreters and captionists for making this accessible to all of our Tigers. And with that, have a wonderful rest of your weekend. Stay healthy, stay connected, and go Tigers, everyone. Bye.